What is PMI? Do you need it? And how can you avoid getting a PMI? Hey there, welcome back to my channel. It's KG, your trusted realtor, and today I am diving into a topic that may sound a bit confusing but super duper important for home buyers. PMI, the acronym PMI, Private Mortgage Insurance. That's what it means. So stick around, because by the end of this video, you have a clear understanding of what PMI is and whether or not you need it and how to avoid PMI. So if you find this video helpful, please don't forget to hit the subscribe button and ring the notification bell so you will never miss out on valuable real estate insights. Let's get started. So, what is PMI? Okay, let's break it down. PMI stands for Private Mortgage Insurance. Another insurance, right? It is a type of insurance that lenders might require from home buyers who are putting down less than 20% on a house. So if you're buying a house, you're putting less than 20% down, lenders will require you to get a PMI. Essentially, PMI is an added layer of protection for the lender, not for you, for the lender. In case the home borrower can't make their mortgage payments and the property goes into foreclosure. Hey, if you don't put 20% down, they want to protect themselves. So when do you need PMI? That's a big question. Do you need PMI? When do you need PMI? The answer actually depends on your specific situation. So if you're putting down less than 20% of the home's value that you're buying, the mortgage lender may require you to get a PMI. Not that they may require, they will make you get a PMI. Make you get a PMI. Sometimes you can have lender paid PMI, but that also comes with caveat, higher interest rate. But let's talk about the pros and cons of PMI. On the plus side, PMI, private mortgage insurance, allows you to buy a home with a smaller down payment, which can be a game changer for many home buyers. How many home buyers have 20%, right? In this day and age. So it helps you get into your dream home sooner rather than later. However, on the flip side, PMI adds an extra cost to your monthly mortgage. So you pay monthly on PMI. So it adds extra cost to your monthly mortgage. So how can you avoid PMI? That's what you want to know. How can you avoid PMI? So if you want to avoid PMI, there's a key number I want you to keep in mind: 20%. So if you can make a down payment of 20% or more, you can often avoid having to pay for PMI. This not only saves you money in the long run, but can also give you more flexibility and financial freedom. So what really means, if you have 20% down, you're going to probably get the best interest rate, lower interest rate. So there you have it, PMI demystified. So whether or not you need PMI depends on your unique situation, the size of your down payment. Remember, talking to a trusted mortgage professional or a realtor can really provide you with detailed and personalized information about how much PMI will be based on your financial goals, based on your credit. Credit is also part of how much PMI you will pay. So if you're on a journey to home ownership and have more questions about PMI or any other real estate topic, I'm here to help. Reach out to me, send me an email, text me for a one-on-one consultation. And if you find this video helpful, please give it a thumbs up, drop me a comment, consider subscribing to my channel to get more on real estate insight, and thank you for watching. On the next video, I'm going to discuss 4 ways to get rid of PMI. So you already got a PMI. How can you get rid of it? 4 ways. Catch you on the next video.